Thank you for having me back in this video. So before we go into our lecture of today, we are going to do a little bit of preview. I want you to understand that this is the part 2 of our previous lectures on stochastic. I want you to understand one fact, that stochastic is a lagging indicator. It's not a standalone indicator. It's an indicator that when you are using, you need to combine this indicator with what I refer to as price action. It's not a standalone indicator, but it's often mimic price very nicely. That is why most of the time when we combine stochastic with price action, they tend to give a very good result. So while we are going to this lecture, I want you to pay very serious attention to this class, and at the end of the day, we will come back to understand what we mean by stochastic. So without further ado, let's move down into the video. Thank you for having me back in this video. Today we are going to continue on our previous lectures on stochastic. How do we trade stochastic? Then what are the way of mimicking the price action of stochastic? Then how does stochastic react to basic movement of price? These are what we are going to look at in this video. Now, without any hesitation, let's move down into the video. Now, I am on Euro Japanese yen. So this is what I'm looking at today. Now, what we'll be looking at in this video is what are those drivers that drive prices when we have an engulfing pattern in a bigger time frame, like with daily chart, 4 hours or 1 hour. What are those drivers that move the price? Now, you will agree with me that the stochastic I have here is showing it has been customized to the point that whenever we're going to have a particular move, this is going to show, it's going to change its color. Now, from here now, if you look at it very well, from here we have the price changing color back to yellow, and also from here it changed color back to yellow, and all this move they correspond to the price action. But I want to lay this emphasis here that trading with stochastic is not an indicator that you can use alone. It's not a standalone indicator. It's an indicator that you need to combine with price action because they are lagging in nature. Stochastic is lagging in nature. So in other words, we cannot use stochastic alone in trading during time of day. Now, I am here is to demonstrate to us why we are using stochastic. Then why do we need to use stochastic to drive the price action? Now, basically, if you look at this place now, you will agree with me that from here, now let's pinpoint every area that we have a turning point on stochastic. Look at it from here. Here's a turning point. Here's a turning point. There's a basic turning point. Then let me try and make this very thicker so that we can see this for analysis purposes. So I'm trying to make it more thicker. So thank you very much. This is thicker than what I expect. Okay, this is okay. Now from here now, you will agree with me that immediately this turn, then we have a turning around this place. Now I want to pick those areas. I want to pick those areas that will basically have turning. So this is another turning from here. This is another turning from here. So I'm coming up with a fact on this analysis. Now here is another turning from here. Another turning from here. Here we have another turning. Here we also have another turning from here. We have another turning from here. So we also have some basic turning around this area. So we're going to pick those areas and we start our analysis right away from those areas. Then we also have another basic turning from here. So we're having all this turning from. Then we also have some basic turning around here. So this is too long. I will not consider this as a major turning because this could be as a result of news that is coming out of New York. So this is also another turning. There is also another turning. Here is also another turning. Now, I'm on 5 minute chart. Now, I want to tell you why do we need to identify the turning of 5 minutes and 1 minute. And also, we need to consider the turning of or an economic pattern in one hour. Now, over time, I've studied this turning. I've studied the reaction of stochastic over time, and I've come to realize that most of the time that when we have 1 minute, that we are having 1 minute chart, we're having 1 minute stochastic, and that of 5 minutes, and there is an engulfing pattern in what? In a bigger time frame, like 1 hour, 4 hours. We often have what we refer to as a run of the price. Now let's look at it from here. From here now, you will agree with me. Let's go back to these are the lines that I drew from a shorter time frame for 5 minutes. Look at it from here. Now, basically, from those areas that I've drawn this line, you will realize with me that stochastic in 1 hour is basically down. They are showing a down direction. Now, from here is down, 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 and from here is also down, is down, is down. So stochastic has been down. So basically, we have what we refer to as a downtrend. Now, why do I pick this? Why do I pick all this vertical line? The reason is this. Now let's move down to 5 minutes. Now from here, if you look at it from here, you will agree with me that around this place, that the price move very fast down. Very fast. They move very fast. There are no orders that is challenging the prices. Now from here, now if you look at this place now, it moved very down. Now let's identify it from here. You agree with me that things are moving very down from here. Now, if you identify it from here, it's also moving very down from here. If you identify it from here, it's also moving very down from here. Now, the essence of doing this is this. I want to identify the area that we have 5 minutes stochastic and that of 1 minute stochastic speaking the same thing. They are speaking the same thing at that particular time. That particular area is telling us that it's an area that the price is going to move. Now, it's identifying the area that the price is going to move. If there are agreement between the stochastic of 5 minutes and that of what? And that of 1 minute, and there are governing patterns or in a bigger time frame, then it's telling us that the next 1 hour candle that is going to move is going to go towards that direction. Now let's move down to 1 minute. We are now moving down to 1 minute. Now we are on 1 minute chart. Let's see how it goes from here. Now look at it from here. If I have to shift this back a little bit, it's still the same 5 minutes candle. Now let's shift it down. This is where we have an agreement between the stochastic of 5 minutes and that of 1 minute. Immediately this happens. Look at how it rolls down. Now, the essence of saying this is that you should know when the prices, that is, when the price of a bigger time frame is ready to move. That is the essence. Now, the essence of doing this is to identify where the price of a bigger time frame is going to move. Now, let's look at this place. Look at this area. Look at this line that I'm having here. This line is referred to as 240 moving average. That is the line. Now, I will not take this trade if I don't have my 240 moving average crossing down. You understand? If I don't have the price crossing down the 240 moving average, I will not take this trade. Now, because it has crossed from here, look at it, because it has crossed from here, and I'm having a retest which basically failed, this probably will be my entry. Look at it, this will be my entry. Now, look at the way it goes. Sorry about this. Now, if you are trading binary option, now this is a pretty good way of taking your trade during binary option. Now, let's take for example, I want to go for 60 minutes. Now, I am on Euro Japanese yen. Now, I want to go for 60 minutes within 4 hours. Now, let's look at let's calculate from here. Now, from here we have our time basically now is on 21:18. 21:18. That means we are 18 minutes ahead of 1 hour. Now, if I'm taking this trade, I want to calculate another 42 candle to make it what? To make it an hour. So I'm calculating 42 candle, and this is where I enter the trade from here. Look at it from here. I have 42 candle. Basically, I am having what? I am having a winning trade. I am currently in money while trading this trade. Why do we have this move? We have this move because we have allowed our 5 minutes and that of 15 minutes, and that of 1 minute to speak the same thing. And we have allowed an engulfing pattern in what? In 1 hour, or basically in 4 hours and other time frame to arrive before taking this decision. So I want to assure you that with this action, you will always be in money while you are trading. Now, while you are trading this system, you should always be aware of fundamental analysis. You should always be aware of your psychological mind. You should always be aware that you have to be patient to allow all this to do what? To fall before you take your decision. Most of the time, why do we fail while we are trading? We fail because we want to take multiple trade. We fail because we are not patient enough. We fail because we are too anxious to take a trade. This is not how it works in forex trading. This is not how it works in trading cryptocurrency. This is not how it works in trading binary options. You have to look at all parameters. You have to be able to identify that, okay, when I enter this trade, what actually is what? What actually is up? Why do we need to have this agreement? We need to have this agreement because it's going to be a driver that will drive the long-time chart to a particular direction. Now, let's take for example, we have an engulfing pattern in a bigger time frame. Let's go back to 1 hour. Now, let's take for example from here. I'm taking an example from here. I don't want to remove this chart. The line. So I'm taking an example from here. Now, let's take from here. Let's take for example from here, from this place. If you look at this place now, here is an engulfing pattern. Here is telling us that we got an engulfing pattern around this place. And now, basically, as we have this engulfing pattern in one hour, there is going to be the same thing in 15 minutes. There's going to be the same thing in what? In 30 minutes. Is that understood? Now, for you to now take this trade, getting an engulfing pattern is not enough to take a trade. Like I've told you in my previous video, that you need to wait for stochastic of 5 minutes and that of 1 minute to speak the same thing. Whenever they speak the same thing, I can assure you, you are going to have a very serious run to that direction. Now, let's take, for example, from here. Look at this place from here. Look at it from here. If I move down to 5 minutes, now, the reason why I'm telling you this, that you need to wait for your stochastic of 5 minutes and that of 1 minute, is that, okay, let's take, for example, from here, is that when they move, you understand, when you see the move from when the prices are moving from here, when they move from this place, in 1 minute and 5 minutes and 15 minutes, probably they may have been oversold at that point that we have that crossing. And the prices need to gather up momentum, needs to get a lot of momentum, a lot of power to be able to do what? To be able to move, to break that support or to break that resistance they want to break at that particular time. So that is why you need to be very careful, even when you got an engulfing pattern in a bigger time frame. Now let's move down. Let's continue with the analysis in 5 minutes. Now, these are the lines that I drew. If you look at this place now, look at the line from here. Are you seeing this from here? Now let's move down to 1 minute again. Let's move down to 1 minute again because I want this to be more clearer to us. Now we are moving down to 1 minute again. Look at it from here. Are you seeing this trend now? Look at it from how we have this. This is where we have the agreement from here. Look at it from here. So from here now, if I count from here, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Well, this is 15-minute candle, and everything still fall under 5 minutes. Now from here now, we have what to call what? We have what to call a downtrend. So let's move back again. Let's continue to see. Let's continue to see. So here's another aspect. We are still seeing. Here's another move. Look at it from here. Here's another move. So we are continuing again. Now, if you look at this place now, look at, immediately we have the agreement between the stochastic of 5 minutes and that of 1 minute. What do we have? We have a run down to this place. Now let's go back again. Let's continue to identify those areas. Now, the reason why we are having that agreement, look at this place. Now, if you are a trader and you want to trade this area, you might virtually lose a lot of money. So don't do that. Wait for the agreement between 5 minutes and that of 1 minute stochastic, and wait for an engulfing pattern in a bigger time frame. Now, let's look at it from here. Look at it from here. Look at the agreement from here. Now, let's calculate the candle that we are having from here. This is over 48 minutes of candle. 48 minutes of candle. 48 minutes of candle. We have this situation starting. So you just need an hour. So starting by 9. So this is 48 minutes of candle. So it's starting at the top of the hour. So this is going to give you probably around this place. You are still in money if you are trading binary options. So these are the area that you need to consider. Look at it from here. This is where we have an agreement between the stochastic of, look at it from here. We have an agreement between both of them, and see the way they move very nicely. They move very nicely from here to this area. This is about 67 candles. So these are how we are going to be seeing how prices are moving. We are going to see the behaviors of prices along the line. This is how we are going to be identifying those behaviors. So of stochastic with the price action. Like I've told you, you cannot use stochastic alone. It's not a standalone indicator. We cannot use it alone to take our trade. It doesn't work that way. We need to combine it with other indicators, and we have to combine it with price action, which is what? Which is a leading indicator. We need one leading indicator, which is what? Which is the price action. I want to assure you that the only indicator that is leading in forex trading is price action, and also your divergent information. Your divergent trading. Those are the indicators that are what? That are leading in nature. So we cannot take a trade where there are no basic agreement between your stochastic and the price action. These are what we need to consider while we are trading forex. While we are trading forex, we are trading cryptocurrency, and we're also trading binary options. We need to look at those areas. We have to look at those basic information to be able to allow us to take a timely decision while we are trading and to make a profitable trade. Trading will become gamble if you are not patient enough. Trading will become gamble if you allow your emotion to override your word, your trading. Trading will become gamble if you allow your psychology to come in while trading. You need to be very patient while you are trading forex. Now let's move back a little bit see if we can get, now look at it from here again. Look at where we have the agreement from here. Look at how it moves. So from this area, during time of day, you will continue to have what? We continue to have a profitable trade. Continue to have a profitable trade while you allow those parameters to be what? To be in agreement. Trading is good when you allow your information to be right. When you allow your emotion not to override your trading system. So I wish you good luck. I want you to take your time and I want you to watch these two videos. I want to watch these two videos so that you can understand how the system is being run. So thank you for your understanding, and I say God